Exchange-traded funds, or ETFs, are open funds that are listed as equities on a stock exchange and are traded on the exchange as index or product funds. ETFs are traded on the exchange and contain funds that follow the index, a given industry, and specific minerals like gold and silver. For example, the size of assets has been rising for more than 10 years and is steadily growing. From $5.47 trillion in 2020 to $7.5 trillion in 2022, it climbed by almost 35%. Please use the website listed below as a resource for information on ETF. One benefit of investing in ETFs is because the first consequence of tiny investments is to purchase all equities included in the ETF-linked index. For instance, investing in blue-chip stocks in the NASDAQ 100 is expensive. However, if we purchase QQQ stocks, which track the NASDAQ 100 index, we will acquire all of the NASDAQ 100 firms, including Apple, Microsoft, and Amazon. Second, unlike general funds, you may only buy them for a transaction charge. There are no redemption fees, sales, operation, or entrustment fees for termination. The exchange allows you to buy and sell. Third, I have the ability to sell straight away when I want to sell or acquire. The drawback of funds is that they can typically only be repurchased at the day's or the following day's closing price. Fourth, generating income is always a possibility. Stocks can only make money when a company's value increases. ETFs, on the other hand, can invest in declining as well as growing stocks, depending on the stock. Fifth, since several equities are bundled together in an ETF, it is less volatile. Leveraged investments do have a benefit in terms of boosting earnings. The fact that it falls farther when it does, though, is a drawback. The disadvantage of ETFs, however, is that first off, because it is simple to sell, frequent sales in line with market trends make long-term investments challenging. Second, ETF shareholders are unable to exercise their ownership rights. The ranking of ETF assets is as follows. Let's examine the top 5 resources. First, the $460,639 million SPDR S&P 500 ETF Trust, SPY. An ETF that tracks the S&P 500 is called SPY. The assets are big, and the stability is sizable as well because it tracks the S&P 500. Investing guru Warren Buffett has previously stated this. If I die, put 90% of my whole fortune into S&P 500 index funds and 10% into bonds. In light of the investment cost that is indicated, it is an ETF that is worthwhile investing in. Second, the $333,123 million iShares Core S&P 500 ETF, IVV. Similar to SPY, it is an ETF that tracks the S&P 500 index. The only distinction is the operator. Third, the $215,953 million Invesco QQQ Trust QQQ. An ETF that tracks the NASDAQ 100 index is QQQ. An ETF called the NASDAQ 100 Index invests in 100 top-notch technology stocks that are traded on the NASDAQ exchange. It contains well-known companies including Apple, Amazon, Blizzard, Microsoft, and Alphabet. Fourth, the $296,642 million Vanguard Total Stock Market Index Fund, VTI. An ETF called VTI has almost all of the investable stocks in the United States. The operation cost for the VTI, which covers around 4,000 businesses, is also quite modest at 0.03%. Out of 4,000 enterprises, the top 10 represent around 24%. Fifth, $110,104 million Vanguard Developed Stock Market Index Fund, VEA. Except for the United States, all developed nations are eligible for investment through the ETF. Japan, the United Kingdom, France, Canada, Germany, Switzerland, Australia, South Korea, the Netherlands, and Sweden were among the top 10 nations. Additionally, ETFs that track the NASDAQ, S&P, and Dow Jones. ETFs that track fluctuations in the cost of agricultural and mineral commodities. ETFs with an energy focus: oil, natural gas, gasoline. ETFs come in a huge variety of forms, including those that track specific businesses' financial, technological, and regulatory developments. Naturally, these ETFs will be organized by J&J Stock Storytelling, and we'll be sure to provide you with plenty of information. Please hold off till we have another video.